Sophie Tau is an artist that specializes in painting landscapes and portraits. She is the owner of Memory Lane Studio and has been your client for the past 2 years. You recently visited Sophie's office to start preparing the financial statements for the year ended 31 March 2018. And what did we say about financial year ends? They are crucial, so make sure that you know exactly when the year end is when you do a question. You were quite surprised to see that her income had more than doubled from the previous years. In particular, you noticed an entry made in mid-January 2018 where she deposited an amount of 165,000 and reflected this amount as income. As Sophie was out of town, you sent her an email requesting her to explain the above events. Late yesterday evening, you received the following reply. Good day, you are right. I had the most successful year ever. I decided to attend more art exhibitions and the response to my work was overwhelming. I've been working full-time for the entire year. In January 2018, an organization approached some of us artists to paint action portraits of the past and present sporting personalities in South Africa. I was honored to be chosen to paint 20 portraits of Olympic and Paralympic medal winners. The idea is to display the portraits and in mid-2019 to have a major fundraising event where the portraits will be auctioned. The organization was very understanding as we explained that if we take 5 to 10 days to complete one painting and we still have to cater for our regular clients, they agreed to give us action photographs, 15,000 Rand per completed portrait, and a prepayment of 165,000 Rand to cover all possible costs. Now, hence that 165,000 Rand that we were talking about, which was then in mid-January that you deposited and recognized as income. So the amount that they will be paying for 20 portraits will be 15,000 Rand per portrait. But in the meantime, they gave us a prepayment of 165,000 Rand. Now, old Sophie immediately used most of the funds to buy canvas, paints, brushes, and other supplies, as I was able to get a large trade discount due to the volume. I remember from my high school days that we learned something about the matching concept, so I had to match the revenue received to the expenses I incurred. It would be very unfair if I had to show those expenses and not the revenue that they will generate. I'm very proud of myself as I've already completed and delivered 6 portraits. I'll be back in town next week and we can meet regarding the financial statements. Now, guys, there are a few important things coming out of these 2 paragraphs. Number 1, she received 165,000 Rand upfront. That 165,000 will be as payment for portraits that she has to deliver. She has to deliver 20 portraits. It works out 20 portraits of 15,000 Rand each. So at the end of the day, she's going to receive 300,000 Rand, 20 times 15,000. Now, the guy who gave, or the people who gave her the job was actually very understanding, and therefore they paid her 165,000 Rand up front. What did she do with 165,000? She has bought some canvas, paints, and brushes. Good. So she recognized the 165,000 as income. Now she has only completed and delivered 6 portraits at the end of the year. So basically, she has only earned 6 times 15,000 Rand. And that equals 90,000 Rand. And that is income earned. Remember the basic assumption on which financial statements are based on, one of them being the accrual concept. The accrual concept says I am only allowed to recognize income when it is earned. Now, she hasn't earned 165,000 Rand. She has only earned 90,000 Rand. Now, what about the expenses that you incurred? We will read the required part now and then we will decide what we have to answer. But it's important that in the back of your mind you have sorted out all these things before you even start trying to attempt to answer the question. Okay, she has bought some brushes and paints and whatever. So what can you tell me out of an expense point of view? Well, out of an expense point of view, I can only recognize that expenses for the canvas paints and brushes that she has already used in order to complete the 6 portraits. She has bought a lot of this stuff. They tell you here, the volume that she bought, and she received a large trade discount, so she bought quite a lot of it. So obviously there will be still canvas paints and brushes on hand at year end. So what are we going to do with that? That will be recognized as inventory. What about the expenses part? Insofar that she has used canvas and brushes and paint to earn this 90,000 Rand income, she must recognize that portion as expenses. Okay. Now let's read what they want from you. Write a memorandum, first thing, to Sophie, in which you discuss the accounting entries that you had to pass regarding the 165,000 prepayment that she has received. So the question is all about what happened here in mid-January. She deposited 165,000, so obviously she debited bank, and she reflected this income, this amount as income. So she credited an income, a revenue figure, 165,000 Rand. So you have to discuss that accounting entry. Then they ask you, also discuss the definitions of the applicable elements identified with the recording of this transaction, excluding the entry in the bank account. Now what did she do? She said debit bank, credit income. So obviously they say don't talk about bank, but talk about the income that she has recognized of 165,000 Rand according to the conceptual framework. Very clearly, it's not necessary to discuss the recognition criteria. So it's all about the definition criteria. Guys, please read your questions carefully. Read it 4, 5, 6 times before you start answering the question to make sure that you're going to answer whatever is required from you. If you've written down 5 pages of recognition criteria, you wasted your time and you would not receive 1 single mark for that. Okay, now let's have a look then. We have to write a memo. So you're going to write a memo to Sophie Tau from F advisor or A accountant or S student, whatever you want to call yourself. Date, whatever date you want to put in there, subject treatment of the 165,000 deposit received. And I'm going to start off with good day, Sophie. The accounting entries that should have been passed should have been, I should have debited bank, statement of financial position with 165,000 Rand. Guys, I cannot alter the fact that I've received the money. So that's a fact of life. Nothing is going to change that. And then I should have deferred that income. So I would have credited an income received in advance, which is a liability in the statement of financial position, 165,000. At year end, she has completed 6 of these portraits. So 6 times 15,000 Rand, i.e. 90,000, I'm going to take out of my liability account income received in advance, because now I've earned the income. It's not in advance anymore. And I can recognize that 90,000 as sales revenue. In my statement of profit and loss, 90,000 Rand. Right, then I want you to discuss income, obviously, and liabilities. There are 2 elements that you have to consider, namely income and liabilities. In order to show it in the financial statements, it must both meet the definition and the recognition criteria of the elements concerned. And then further on, the question says, but they only want definition, they don't want recognition. Okay, so what is the definition of income? It's an increase in assets or decrease in liabilities that results in an increase in equity other than those relating to contributions from holders of equity claims, i.e. the owners. Was there increase in assets? Yes, there was. What was the increase in assets? She received the money, so her cash resources has increased. So therefore, there was definitely an increase of assets. Now, was that increase? Did it have resulted in an increase in equity? Now here you can argue both ways. Is one way of arguing and say yes, and both of them are correct. Guys, you will receive marks for both. Yes, income was earned. She provided the service. She completed 6 portraits. She received 15,000 Rand per portrait. So she's allowed to recognize 90,000 Rand worth of revenue. What does revenue do to equity? Revenue increases equity. When she receives the money initially, there was an increase in assets of 165,000 Rand, but there was simultaneously an increase in liabilities of 165,000 Rand. So, did equity increase with the first entry? No, it didn't. Because remember, what is my equation? Equity equals assets less liabilities. And assets has increased with 165,000 Rand. Liabilities has increased with 165,000 Rand, so it cancelled each other out, so it had no impact on equity. But when I recognized this, what happened here? Here, there was a decrease in liabilities. You see that? A decrease in liabilities. And that resulted in an increase in equity because sales revenue has increased and income has the effect of an increase of equity. Assets increased and liabilities decreased when I recognized the 90,000 Rand. And nowhere else in this whole equation was there a contribution from the owner of the entity. Okay, the assets increased initially. Okay. When we recognized income, the income earned of 90,000 Rand, then equity increased as a result. Okay. Other than those relating to contributions from holders from equity claims, like I said, there was no contributions from the owner. The fact that they used 165,000 Rand to purchase brushes and paint on all canvases, that is irrelevant in this question, guys, because that is not, it's got nothing to do with that entry that happened there, because that is specifically what they refer to. And then furthermore, whatever was left of those materials which she hasn't used as yet would have been shown as inventory and would not have been an expense. Okay. Now, if we say 165,000 Rand was a liability, and of that 165,000 Rand, we have recognized 90,000 Rand, it means that the remaining 75,000 Rand will still be lying in my books as a liability. So what is the definition of a liability? A liability is a present obligation of the entity to transfer an economic resource as a result of past event. Now, is there a present obligation? Yes, there is, because Sophie has the unavoidable obligation to complete the portraits for which the money has already been received, or if she's not going to do that, she has to return the money. So she has received 165,000 Rand, and that was for 11 portraits. I'm just going to add it here, 165 divided by 15 equals 11 portraits. Oops. How many did she complete? Completed 6. So can you see that she received more money than for the work that she has performed until year end? So 5 portraits money has already been received, but she hasn't delivered the goods as yet. Is there an economic resource? Now, firstly, guys, you have to tell me what is an economic resource. So economic resource is a right which has the potential for economic, in this case a liability, economic outflow of resources. Now, is there going to be a potential for economic outflow of resources? Yes, for sure. She either has to complete that other 5 portraits, the 11 less the 6. If she's not going to complete it, she has to give them the money back. So if she's going to complete it, what's she going to use? She's going to use economic resources in the sense of canvas, painting, paint, brushes, etc., etc. So therefore, there's going to be an outflow of economic resources. If she's not going to complete it, she has to give the guy his money back. And therefore, the cash resource will be an outflow of economic resources. As a result of past events, well, the past event was the date that she entered into the contract, where she agreed to do the portraits, 20 portraits for the guys. And so at the date that she also received 165,000 Rand, she was unavoidably committed in order to deliver the goods. So what is the conclusion? Only the 6 portraits that have been delivered meet the definition of income, meaning that 90,000 will be reflected as income on the statement of profit or loss and other comprehensive income. The remainder of the deposit, being 75,000, must be treated as a current liability on the statement of financial position, and then you're going to end off. Kind regards, Mr. F. Advisor.